Given the current investment climate whereby bond yields are dipping, why should investors consider investing in the Nikko Shenton Asia Bond Fund?
As you have mentioned, we are in an environment of falling global yields. In fact, several bond markets are now even offering negative interest rate. Increasingly, we will find that attractive and good quality yield is becoming a scarcity. Investors should consider the Nikko Shenton Asia Bond Fund because it invests mainly in Asia local currency bonds, which command higher yields than bonds in developed economies. And the fund is currently well diversified across 9 Asian countries. Importantly, we are talking about good quality yields here. Currently, around 80% of the fund is invested in Asian government bonds, which are all investment grade. The average credit rating of the fund stands at around A-. So this fund is suitable for investors who want better yield over a developed market, prefer good quality bonds, and do not want too much exposure to corporate bonds. If you recall, in recent years, many investors were badly hit by corporate bonds defaults, particularly the weaker credit quality bonds. And why invest in Asia? Asia is one of the fastest growing regions in the world with potential for reforms and increased investment. Since the Asia financial crisis, Asian fundamentals have improved tremendously. Most Asia countries have manageable debt levels, healthy current account, adequate FX reserve, and generally a more stable political environment. Inflation in Asia has been well moderated, which allows room for central banks in Asia to ease their monetary policy if needed. This is important as bonds tend to do well when the central banks are cutting rates. And unlike developed economies where policy rates are near zero and their central banks have to resort to quantitative easing, which is what we call QE, Asia's central banks have ample rooms to cut their rates if needed. Lastly, Asian governments are committed to developing the long-term growth and liquidity of their local currency bond market, which is important to investors.
What is the investment framework that the team adopts when deciding on the fund's asset allocation?
In terms of how we decide on asset allocation in a fund, our team adopts a top-down macro approach and bottom-up credit research across 3 broad areas. First, we look at fundamentals of the country. Fundamentals factors such as growth, inflation, current account, fiscal health, all these have impact on the currency and bonds. Next, we look at valuation. We use in-house models to decide if a particular currency or bond is overpriced or attractive. Lastly, technicals of the market is important to watch as well. We look at technical factors such as fund flows, behavior, and supply and demand of bonds. We then formulate our investment decision based on our analysis of these 3 factors, which will determine each currency weight and duration positioning in the fund. For example, we are positive on Indonesia given the country's resilient growth, benign inflation, attractive yields, and healthy investment flows into the country.
I understand that the team has the ability to allocate up to 30% of portfolio assets beyond the Asia-Pacific region. What is the selection process for these countries? And are there any non-Asia Pacific countries allocated currently?
Currently, the fund invests purely in Asia local currency bonds and does not allocate outside of Asia. This is also one of the factors that differentiate the Nikko Shenton Asia Bond Fund from our competitors. We adhere closely to the key strategy of the fund, which is Asia local currency bond strategy that invests mostly in government bonds. In other words, our investors get the intended exposure of the strategy that they invest in, without taking unnecessary currency risk outside of Asia or taking on excessive corporate bond risk. Asia local currency bonds is a growing asset class, and it is an increasingly important asset class to hold in a well-diversified portfolio. Within the emerging market space, Asia also stands out as a region with superior fundamentals, subdued volatility as compared to other parts of emerging market, such as Latin America, Central Eastern Europe, Middle East, and Africa. Lastly, inclusion of Asia in the popular benchmark bond indices is also a testament to the growing importance of Asia and opens the door to a new wave of long-term investors.
The fund has been included in our FSM recommended funds list for the past 6 consecutive years. Share with us how the fund manager managed to achieve consistent outperformance.
Besides having a consistent and systematic approach in our investment selection, we think it is important to manage the downside risk of the fund. Hence, we adopt a disciplined risk management approach by constantly seeking to identify and minimize risks through rigorous and systematic due diligence and research. When market moves unfavorably against us, we review the strategy again and trim the position if we see the need. We ensure that risk management is integral to the entire investment process with constant dialogues between the fund managers and the risk management team. This also aligns our investment process to our investment philosophy of capital preservation for our investors. Nikko Shenton Asia Bond Fund is a good example of bond fund that allows investors the potential to accumulate income and enjoy medium to long-term capital appreciation.